Hey traders, Michael or Minifrost here. You're here for another episode of Common Sense Market Analysis. Today is Monday, September 29th, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? We got a lot of interesting stuff to talk about today. To start, we'll go over the spiders, some important numbers that you need to know throughout the whole week. We'll go over the shorter term and longer term perspective of the spiders. We'll take a look at some of my favorite market leading indicators because there's some key things that are going on with those other markets that can possibly relate back towards the spiders. I also got a few interesting things up my sleeve to show you guys that I think you'll find interesting, obviously relating to the market. We'll go over that a little bit later, so stay tuned. So we're looking at a daily chart of the spiders, and as you can see, I have two important numbers on the board. You probably heard them before, but I'm gonna tell you again. The blue line represents the devil numbers, 666, where we pretty much topped out at. As you can see, the high was 667.34. That was the day where we were up $3.63. And if you've been following along, we can give that a funny how that works. If you don't know what I'm talking about, go back to my previous videos and you'll understand. So you're probably asking, why is this number important? Well, because this is going to be natural resistance for the market. It's a psychological number. Those numbers hold importance within the market itself. It's also right around a stone's throw away from the previous all-time high. It's around 20% of the high of this breakdown candle. And as we know, the high of these breakdown candles are overhead resistance. Here's an example right here. This is a breakdown candle. It's not the best one. We like to look for bigger ones on the chart. Here's another one right here. Obviously, in comparison, this one is bigger than this one, but they served the same purpose. The high of these breakdown candles is overhead resistance. Right here, called resistance, wasn't by that much, but it still indeed was resistance. And right here, around 20% of the high. It doesn't have to be the exact high. If I move this candle down a little bit, as you can see, we found resistance near the vicinity of the highs. So that's why this area right here is going to be important. It's natural overhead resistance for the market, and we already came up a little bit short. FYI, the high of today's candle was 665.28, 72 cents short. So you can constitute that as a first time, best time situation. So we could look for a spike through of this number, possibly getting a little higher towards the all-time high, previous all-time high. You know, you have 666.66. That's an important psychological number as well. You got 666.99, pretty much 667. So anywhere in that vicinity should be natural overhead resistance. But we also have to assume the other side of the story, in which she could just be stupidly strong and blow through everything and just surprise everyone and make new all-time highs. That certainly can be a possibility. That's why we always have to have an unbiased viewpoint of the market, where the umpire's calling balls and strikes. What about this other number on the board, 660? That's a longer / medium term pivot number. That's why it's in green. The longer we stay above this number and close candles above, we're in the bull case situation. But, capital B-U-T, if we do decide to close candles below the pivot, then that is the bear case situation. Take note that last Wednesday, hump day, we pretty much nailed the pivot right on the money. Close candles above. The next day, we had a little bit of a gap down situation, went to retest these lows right here, came up a few pennies short of the low itself, but we did try to recapture the pivot and failed because we did close below it. So that was the first sign of some initial bearish behavior. But then as Friday comes around, we had a little bit of a floater Friday situation and we closed candles above it, and now we're doing the same thing today in the vicinity of retesting the previous all-time high. We're approaching the psychological number that traders are obsessed with. I'm obsessed with it. You got the devil numbers, the 666, 666.33, 66, 99, all within that zone. All of those are important numbers. So for simplicity's sake, we could call 666 to 667 an area of overhead resistance. But take note that we did come up a little bit short today. 72 cents to be exact. We're going to do things a little bit differently today and just jump around a little bit. So right now I'm looking at a chart of the transportation department, a daily chart. This is also known as our second favorite market leading indicator. And as you can see, another pivot line is drawn at 15,650. You can just see it with your own eyes that that number was uber important. For the last 20 days to be exact. From this candle right here, this was the first time we tested the pivot. We bounced right off of it, pretty much nailed it on the dot. From this candle all the way to the current candle is 20 candles. And as we know, 21 is an important number. And just from a technical analysis standpoint, we're above the pivot. The last 5 days we closed candles above it. We've now reestablished price above all the moving averages. Above all the moving averages, the trend is your friend. And now we're approaching the downwards trend line. We've been trading within this triangle for about a month now. And as we get closer and closer to the apex of the triangle, this area right here, the transportation department has to make its decision. We can still eat time off the clock, getting closer and closer to the apex of the triangle, or price can break out. Either way. But we have a few things representing a bullish situation. We're above the pivot. We've reestablished price above all the moving averages. We've already came up short a few times, so that can technically constitute as a first time, best time situation. And also, to keep in your back pockets, we are in an on-time situation. So we'll see if she's built up enough energy over the last month or so to break through this downward trend line. Or will we get a little bit of a turnaround Tuesday, maybe go back for a retest of the pivot? As you can see today, we did exactly that. We came up a few cents short, but pretty much made another test or attempt towards the pivot. So that's certainly not out of the question. We'll wait and see. Let's take a look at Next Era Energy. This was one of our swing trades that just hit its final profit target alert. Members got the entry alert at 69.45 right here, and we pretty much nailed the low. This trade is now officially closed. We've reached all 3 profit targets from 69.45 to 76.08. That's a nice chunk of points, and a lot of members within Lazy Swing Trader made a lot of money. How do you like them apples? The Lazy Swing Trader Automagical Algo system. If you want the trades, you want the alerts sent straight to you, right in your inbox or text, then the Lazy Swing Trader is exactly for you. We basically give you the setups. Alright, let's take a look at inside the numbers starting with the 0 dark 30, and trust me, you want to pay attention to this. I'm going to go over some important numbers and a little bit of the shorter term perspective of some things that can happen later on this week. Maybe tomorrow, hump day, leading up towards Friday. It's going to be important. We always have to understand the shorter and the longer term perspective. So here's the notes written in the morning before the opening bell. As you can see, we have our morning pivot for the day at 664.50. That's the first number you need to know. You know the drill. Above she's bullish, below she's bearish. And then we also have the first support zone on the board at 663.70 to 662.65. And then also, if you want to know, we had a midpoint phenomenon between the two numbers. And then we had Friday's gap. So we got all the numbers on the board. Everything is labeled. You got the pivot in green, support number 1, 2, and then Friday's gap. So we were above the pivot before the market opened, and then as we got closer and closer to the opening bell, we opened below the pivot. So that was an initial bearish sign, and then we stated in the notes, which you'll see later, is the first support number right here was on the board for a long trade back towards the pivot. And as you can see, we almost nailed it on the dot. The exact low was 663.73. Came up 3 cents short. But that's not to say that we didn't have traders front run the number. Okay, we don't split hairs over pennies. This was a good area of support, the front end of the support zone. All of this right here is the support zone. You got the front end number, and then you got the back end number. So the market found support at this number right here and went right back to the pivot. And then we were essentially playing ping pong with the pivot for a while. It was a pretty choppy tape to start the morning. We eventually started to close candles above the pivot and then got back down, closed candles below, and went right back to the first support number. And this is why the first time, best time situation is so important, was because the second time around coming into this number, it's not the same trade. And as you can see, it didn't really hold for too long. She tried making her way down to the second support number, the back end number, came up short again. This is more towards the afternoon, and as we know, the afternoon is a different type of tape. It's a slower tape. It's a torture tape. That's why we don't trade it. It's a morning business. We look for the morning trade. This right here was essentially our morning trade. So we came up short, went right back to the first support number and started using it as overhead resistance. These numbers can be used as support on the downside or resistance towards the upside, like we saw right here. And we spiked the second number. No surprise there since we came up short the first time around. Played some more ping pong. And then here's where it gets interesting. We missed Friday's gap. We came up a few cents short. So now that is considered unfinished business. I'm not saying it has to be tomorrow or Wednesday or sometime this week, but the market is eventually going to want to complete that unfinished business and make it finished business. The market doesn't like to leave those gaps unfilled. Also, just throwing that out there, that tomorrow is an important date. It's the last day of September. It's an important psychological / numerology number, 9/30. We're transitioning into the spooky season, Halloween, where things can get pretty scary. And along with these numbers that we've been seeing and talking about, the 369, the 666 numbers, this month can certainly be a little bit scary for the market. We'll just have to take it day by day. Staying above the original pivot number, the longer term pivot that I mentioned earlier this video at 660, staying above that is obviously important, but tomorrow's pivot, in which Inside the Numbers and live room members will have ready before the morning session, that is going to be super important. Whether we want to go up and test those highs near the 666 number, or if we want to come down, potentially complete the unfinished business down below, and even head towards the 660 number. Inside the Numbers and live room members will be ready. You can pause the video, read the notes, and go back to the chart to double check the work. It's all here for you, at your disposal. You got the SPY game plan, the intraday updates. We also have stocks on the move. We had one today, but unfortunately did not hit its entry target. And then we also have a list of 13 different support and resistance numbers for different markets. That includes the Qs, IWM, gold, crude, Bitcoin, Tesla, natural gas, SMH. We have something for everybody. If you're a day trader, then you need to check out Inside the Numbers / the live room. If you don't have time to day trade, then check out the Lazy Swing Trader, an automated algo system where we send the trades right to you with an 87% win rate this year. Take a look at all of our trades below. What's going on in Camp IWM? We're up 0.12%, 28 cents. We're above all the moving averages, so yes, the trend is your friend. And we're not there yet, but we are approaching the previous all-time high. That comes in at 247.18. You also have this most recent breakdown candle high, so that is going to be some overhead resistance for Camp IWM. So between the previous all-time high and this breakdown candle high, this should be some overhead resistance. So we are in a pretty bullish situation for my number one favorite market leading indicator. We can get some normal garden variety behavior back and forth, possibly wanting to retest the most recent breakup candle low, right around 239.33. Funny how that works. If we get past that, then we have the opportunity for maybe a spike to low and rip it back up in the other direction, or reaching the 20 period moving average, which we haven't been to in a while. Perfect example of the Qs running a test of this breakdown candle high and finding resistance at that high, near or at the vicinity of the high. So we had the Qs kind of do the deal a little bit early compared to the spiders and IWM. In IWM, we are approaching that overhead resistance area with these breakup candle highs as the creation of the zone. So we did the deal with the Qs. Looking at the flip side situation, we still have this unfilled gap right here at 595.97. So price could want to go run a test of that, complete the unfinished business, and then go from there. But obviously in a very strong bullish position. No doubt about it. Here's some interesting puzzle pieces / food for thought. I played around with the moving averages, and some people did tell me to experiment with different moving averages, such as the 33 moving average, which is this orange line right here. So I changed it from 20 to 33. And then the blue one is still 50. The purple is orange. And the 200 all the way down here is a 666 moving average. We'll call it a devil moving average. These are all important biblical, psychological, we could even call it strange numbers. And I'm mainly talking about the 3s and the 6 and the 9s. And as you can see at the 33 daily moving average, this definitely could have been our home base that we normally use. Hit it right here, pretty much nailed it right here, came up close here. But then here's where it gets pretty interesting, is the devil moving average in black. Almost nailed it. The low of April came up about $1 short, but it's pretty interesting how this was the area where the market found support at when we were in this downtrend below all the moving averages. Normally we would have the 200 period moving average, which would be somewhere around right here, but we were below all the moving averages, but found support at the 666 moving average. Interesting puzzle piece information. Let's go see what else. So if we scroll back, as you can see right here, found support off of it, spiked it by a little bit right here. Let's go back a little bit more. So here we are towards December in 2018. This was the Christmas Eve plunge. And as you can see, the 666 moving average didn't really do much. She blew right on through. But I'm going to change this moving average just for a second so you could see some pretty wicked stuff. So I'm going to my moving averages and changing it to 999. And as you can see, right on the frickin' money. Those numbers are important. The 3s and the 6 and the 9s. So we changed it back to the devil moving average. And let's go back a little further, see what else we could find. Right here, nailed it on the dot in 2016 of June. Let's keep going. This was important right here. Spiked it a little right here, but this was support at 666 moving average. Let's keep going back, see what else we could find. I'm sure we could find one more. And what do you know? Right here, August 2011, pretty much nailed it right on the money. And right here, definitely some interesting information. Alright, so let's take a quick look at SMH, shaking my head to semiconductors. And by the way, I kind of want to try something a little new. If you guys have any stocks that you want me to take a look at, whether it's Nvidia, Microsoft, some of the big time players, or something different, I don't really care. Whatever it is, whatever you guys want me to take a look at, do some technical analysis, maybe provide you guys some support and resistance numbers, leave a comment down below and we'll give it a shot. Alright, I'm not going to take a look at some $1, $2 BS stock. Make it worth your while. Also, real quick, in SMH, found support at this devil moving average, the 666 moving average. Funny how that works. So today we actually made a new high in SMH. We're up 84 cents, that's 0.26%, and we made a high of 326.83. This was pretty much a spike the high. Here was the previous all-time high. We spiked it and then came right back down. But take note, and I'll zoom in a little so you can see it a little bit better, we did not fill this gap right here. That is unfinished business. And that is a pretty important number if you just take a look at it. We closed pretty much right on it. We found resistance the day after. We made a high at that number. Again, the next day, couldn't get through that number. Closed right on it right here. And then came up a little bit short today. So that number is important. Whether we hit it on the dot and bounce right off of it and then go back up near or towards the highs, or maybe even spike right through it, whatever it is, we'll have to wait and see. But inside the numbers and live room members will have those numbers ready. I'll tell you this, that we did come up short, so that is technically a first time, best time situation. And that's pretty much all we have for today. You guys know I appreciate each and every single one of you. You can put that on a sticky note. So we're going to pull the ripcord for today. I'm Mini Frost. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.